Monday, and let's get right into it. So I make this video on why taking 2 trades a day will help you become profitable and why it's best to take 2 trades a day. And here is basically why. So hold on a second, give me 1 second. Let's put the okay, you know what? Yeah, there we go. So 2 trades a day. First reason, less emotion. When you have a mechanical system in place, it prevents you from emotionally breaking those rules because of that system. Preferably if you have your trading strategy written down. So let's say if I take 2 trades a day and I win them and I get confident, and then there's another trade and I want to take it so bad because I'm like, oh man, I can definitely do this trade. You don't want to do that because the second you do that and you lose, that just messes up your whole risk to reward ratio and your whole system. And that's the whole point of, and that's actually the system that allows you to become consistent in the market. So when you don't have a system in place that you follow, how are you supposed to be consistent? Because consistency is a result of doing repeatedly the same thing over and over consistent. And so if you're not doing the same thing because you're breaking your trading rules and you're taking extra trades and going off and doing stuff like that, that's going to prevent you from winning. And the second one is discipline. So it gives you discipline because of that fact, like I just said. If you know you only have 2 trades a day, then that's going to prevent you from making any dumb decisions that could potentially ruin your account, right? So that's discipline. So laser focus is next. So laser focus, obviously, if you have 2 trades a day, you don't have analysis paralysis from looking at all these different charts. And let's say you have 7 pairs you're looking at and you're trying to trade like 14 trades. When you have 2 trades a day, you're only looking at 2 charts. And especially if you're a news trader like I am. And so you can actually pay a much more attention to that, and you have a higher win rate because of the fact of your attention being only focused on those 2 assets. And you have less stress because of that fact. So for example, when I trade, and I say this all the time, and I'm going to keep saying it because if you're not a profitable trader, this is literally going to work for you. So I only trade based off the news. So like today is the US dollar move. We had news at 8:30, so I only looked at Sunday, which was yesterday. I only looked for pairs that had the US dollar currency, whether if it was Forex or futures. And so when you do this, it basically is a cheat sheet because volatility equals activity. When there's activity in the market, there's a highly likelihood of there being more supply and demand zones for you to trade or whatever you guys trade. There's more movement, so there's a higher chance of your strategy or your setup being shown on the market if you trade smart money, institutional, supply and demand. And so yeah, and also another thing, the only reason the markets move are because of the banks, institutions, and hedge funds. Those are the people that, in the Forex market and also the futures market, those are the people that have the most money, hence creating the most buy and sell orders in the market. And so because of that fact, visually on the chart, when price moves, it only moves because of that. So when there's US dollar news like retail sales and all that stuff, that adds supply and demand, and institutions will, as a result of the economy, make trading decisions off that have millions of dollars worth of buy and sell orders. And so the cool thing is, when these events happen and when the institutions get in the market, you can visually see when there's demand and when there's supply in the market. So it's a no-brainer. It's really simple. Use the news to find trading setups. All my setups come from the news. Whether you're a Forex futures trader, if you're a futures trader, just pay attention to the US dollar currency. And for futures, the best time I find to trade futures is 9 a.m. to 11 a.m. That's when I usually trade. That's when it's the most volatile. And you can trade in the evening too, of course. There's plenty of other times people trade futures, but that's when I trade futures. London session, 3 a.m. and then it ends at 9 a.m. That's when I end it. Some people say it ends at 12, but I think it ends at 9. That's what I was taught. And yeah, guys, so I hope this video was helpful. I want to show you guys something else. And I'm literally going to show you. So when there's news, this is basically what happens. So when the market, that's the trade I'm in right now for US 30. So when the market is moving, it's because there's volatility in it, because there's activity in it. So let me show you what I mean by that. So when the market, there is no activity, the market will just go sideways like this, right? It'll just go sideways, not really do anything, right? Maybe you go up a little bit, sideways, go up. But when there's medium volatility, the market will go this way, right? And then when there's high volatility, the market will go, right? So the reason why I trade off of the economic calendar is for that fact alone. Because, hold on a second. Fucking phone went off. Fuck. Just give me 1 second. God damn it. Alright. So, I'm under all these graphs that I just drew. I'm actually going to show you the kind of market that I trade in so you guys all know what I'm talking about. So the red stands for high impact, so high volatility. The middle one, the orange one that I'm just changing to, stands for medium impact, and the green one stands for, well, the yellow one stands for low volatility. When there's low volatility, I'm not making much money for me and my strategy. I like to preferably trade medium volatility and high volatility. And so these are the two markets that I trade. And so these two markets only come in when there's orange and red on the news. So like I just drew the orange and red, these two markets are supposed to correlate and match this. So when you, let's say today is Friday, right? Or today is Tuesday, and you see, okay, on Tuesday, 6 a.m., we have Euro news moving. So we have the European currency moving. We have Canada. We have the Japanese yen, which is going to be moving in the evening usually. And because of that, you can actually go on the chart and then take this information that you have. You're like, okay, these are the pairs that are going to be active, and you can choose your assets based off of that. And if you're a futures trader and you don't trade any of this, you can still trade futures from 9 a.m. to 11 for the most volatile movement, because that's usually when the most volatile movement happens: silver, US 30 gold. So that, keep that in mind, and I'll even write that down. So for if you're a futures trader and not a forex trader, 9 a.m. to sorry guys, it is 9 a.m. to 11 p.m. is when you want to actually trade futures. All right, so I wrote that down on the screen, so I hope you, if you're watching this, you can take notes. So yeah. Yeah, it's really simple. I know it seems like a dumb no-brainer, but that's literally all I do. Today's Monday. Like I said, on Sunday, I went in the market and I looked for Monday, which is today, and I knew that the U.S. dollar is healers red and orange. So that means that the markets that are red and orange, like I just taught you, the red one, highest volatile movement market. So that means this red one right here, I'm pointing arrow to, this is a high volatile market. Orange, medium volatile. So that means for the U.S. dollar, we're going to see red and orange today. So that means there's movement. And so I'm only trading pairs and currencies or assets, gold, futures, forex, doesn't matter, even Bitcoin, anything that has the U.S. dollar in it, that's going to move today. And I can focus on that and I can choose. And here's what you need to do once you know this: choose 1 to 2 setups. So now, because there's plenty of pairs and assets that have the US dollar currency in it, so to avoid analysis paralysis and getting confused and remaining laser focused on a strategy, choose 2 setups. So one, go on, let's say you're looking at gold and you're really confident in the gold setup, trade the gold setup, right? Trade the gold setup and be like, oh, well, I'm really confident in this setup today because the US dollar is moving today, and gold looks like it's going to be moving, and I found my setup, so that's one. Now find another one. So let's say you found gold, and then you find USJPY. If you're a forex trader that has the US dollar currency, USDJPY, you're trading the US dollar side of that pair, and you can actually say, oh, well, I found a setup for this one too, and then that's your 2 setups. Don't continue finding more setups beyond those 2, because you're definitely going to find more, because there's other pairs with US dollar in it and they're all going to be moving. So only find 2 to avoid over leveraging. And over leveraging is when you have a risk management system, and because of your excitement or your greed or whatever, you potentially hold back the scalability of your account by over leveraging and taking more leveraged lots and more positions than you intend to because of your emotion. And so that's what it is. And so yeah, guys, I hope this video was helpful. I'm gonna have to end it here because laptop is currently on 13%. So, but yeah, if you want to connect with me, if you have any questions, write it in the comment section. I'll answer you, or you can message me on Instagram. Um, but yeah, I might be able to give you guys. Hold on, let me just do one. Let me give you guys one more step. Let me give you guys some more value. Hold on. Okay, so the first here's last thing. So the first step is news. Second step is charts. So trend, news, trend. Third step is find, setup. Right? News, identify your news. So what I mean by identify the news is I mean by identify which type of market that you're actually in. So are you in a red market, an orange market, and a yellow market? So if there's a yellow market, get out the market unless you're a type of trader that trades this. I don't trade them. If there's orange, trade the orange. That means the market is medium. It has medium volatility, so there's going to be somewhat activity to it. So you can trade it and make some decent profits if you're not ready to trade a high volatile market that moves fast. So yeah, news, trend when you go on the actual charts and you label your market structure, your trend, and then find your setup. So once you find your trend, if you're bullish, you're buying low. Why are you buying specifically low? If you're bullish, you're asking because when the market's bullish, it goes up, down, up. It can't go straight up, right? So when are you going to enter? When it goes down before it goes up again. Common sense. So yeah, that's pretty much what you do, and it's really easy. It's really easy. If you think it's hard, I literally challenge you to just talk to me, and I'll help you figure this out. It's really, really, really easy. Really easy. It all comes down. The hardest part is, I guess, finding the specific entries based off your strategy. Mine, I only trade two types of setups. I only trade number one, fair value gap / imbalance gaps, if you're familiar with that, which are my supply and demand zones, and I trade order blocks, so OB, and that's the only two setups I take. I don't trade anything other than that. But yeah, guys, I hope this video was helpful. And yeah, I'm gonna go ahead and end it now. Peace.